Your market news now. Asian markets staged a much-needed rally on Wednesday as investors tracked Wall Street's best performance in more than 6 months thanks to a healthy round of earnings reports. Bargain buyers took advantage of the strong readings from some of the world's top firms to step back into the mix with a dip in U.S. Treasury yields and Washington's announcement of trade talks with Japan, the EU and Britain helping sentiment. The news helped distract from long-running worries about the US-China trade war, which shows no sign of abating. Hong Kong is closed for public holiday, so no trade on that floor. But the Nikkei in Tokyo gained 1.3% to 22,841, while the Shanghai Composite Index was up 0.6% at 0.6%. U.S. stocks surged more than 2% on Tuesday after upbeat earnings reports from major companies, including United Health and Goldman Sachs, and solid economic data as equities rebounded from a recent sharp sell-off. The S&P 500 registered its biggest daily percentage gain since March, rising over 2% to 2,810 points. The Dow Jones Industrial Average rose by a similar margin to 25,798, and the Nasdaq Composite added close to 3% to 7,645. For more on the markets, we cross to Arabile Gomede. He's at the Johannesburg Stock Exchange. Arabile, good afternoon. Not so much good news here at the JSE.
Look, Nzinga, if it wasn't for the color of my tie, you might think that I'm repeating myself consistently here. The market again down around 0.8% at midday. It is an interesting picture when you continue to look at the companies that are falling almost 20%, 18% down for the likes of Mediclinic. Naspers suffering over 2% of losses as well. Considering what Tencent has done out in Asia, it tells you a clear picture of how Naspers is trading at present, well below that 2,800 mark, even well below the 4,100 mark that it reached as its all-time high as well. A lot happening across the board. We are one of the very few indices that are going down, however. Perhaps it is a bit of risk-off trade, but let's show you exactly how the local and international markets are trading. Well, if you take a look at that market now, you can obviously tell there's a lot of red across it, as you just saw there as well there across the board. But Makwe Masilela, who is from Makwe Fund Managers, joins me now as we unpack some of it and make sense of this market picture. If possible, Makwe, can you make sense of it? 0.8% down for the all share, an absolutely red board on our front. What is going on?
Very frustrating, given that, our peers are up, we have just seen what happened with Asia and then what's happening with Europe, the foods that are just up. But I think with us, we understand, the likes of Naspers been down, the likes of Remgro been down, we understand why our industrials are down, And also now with the rand weakening, it's not surprising to see financials been down. We've seen most of the banks are down, even our retail stocks are just so down. But I think the thing is, markets have been driven like yesterday or so, the risk on was back, in the sense that markets were doing the right thing to be driven by company earnings. We saw good company earnings coming out of the US, hence the market were excited. And I think that's the most important thing. If we can also explain why the likes of Mediclinic is down, it's also because of the bad earnings. So it makes sense that the guys didn't make money, hence the share price is down. But now I think also people are worried about what's going to happen. There are rumors that the government might try to be creative when it comes to the collection of tax, whether they're going to increase that or so. I think to some extent, that is going to have a negative impact on our markets back home here.
Yeah. Do the earnings seasons then locally then have a severe impact on how the market will trade for the remainder of this quarter specifically?
Definitely, and I think that's the right thing, because why should the stock price go up? It's because the company made money, and that's what's supposed to be driving the whole thing. But I think today, this whole rumor that, hey, the guys might try to do something when it comes to taxes, and we hope it's not right, I think to some extent it's having an impact, because you look at other emerging market countries, they're just doing just okay, and then they're just celebrating the results that we've just seen from the multinationals.
Yeah. Are you worried then that the MTBPS will be a different document to the one that Nhlanhla Nene would have actually put forward?
No ways, because it takes you so many months to prepare that document. But the beauty is, whoever is presenting it, it must be someone that people can just believe whatever that is saying. Yeah. So it's going to be the very same one.
So you and I could go up there and put up and read the speech because it's been set a long time ago. But it's the trust factor, right?
Exactly.
And do you think the market then trusts Tito Mboweni as much as we've seen?
So far, we've seen the rent reaction. We've seen what the business community are happy that they've got him. Though people are saying he's been recycled. But yes, we wanted someone that who will just lend and do the job. We saw even the Moody's, they said, oh, let's wait, let's give him a chance before we can even announce our credit rating. So I think they do have some bit of confidence.
Although they did come out yesterday giving out, a slight outlook saying there, look, we're a little worried, but things could get better if you do this. And things could get worse if you do that. And I suppose that just comes because we have a stable outlook.
And those are the things that we know. They've just emphasized that, guys, make sure you do something about the structural reforms. So there's nothing new that the guys have just been mentioning. So I think it's more of, let's continue to emphasize this, and hopefully these things will be implemented.
Very interesting front there. Let's talk about the price of the rand as well, 14.25. One would have hoped that it improves even below that 14 rand mark because it stayed there for quite some time now. Is this the new normal?
I think so, to some extent, because we've seen what has been happening with the dollar, and unfortunately the rand so far has been driven what's happening with the dollar. I mean, with the Fed minutes that are expected later today, we see the dollar just managed to start picking up compared to some of its peers, If you compare that basket, I think the rand is at the mercy of what's happening with the dollar. But what will be a catalyst for the rand as well will be what are we going to get when it comes to the midterm budget speech.
Yeah, you also had Dis-Chem come out with their earnings, wasn't it? Yes, we saw Pick and Pay yesterday, and that was an absolutely stellar set of earnings on their front, which beats the retail spectrum. The same from Dis-Chem?
Not surprising, given that even the retail numbers released today for August were good numbers, coming up at 2.5 compared to the 1.8 that 1.3 that we saw in July. And the likes of this Pick and Pay, you can see it's a question of them getting more market share. How do you manage to get that? They had what they call the focusing on the pricing. Just check the internal inflation of Pick and Pay is almost 0.3 compared to the food inflation, which is sitting at 3.5%. This came the same story. They get this single exit price that is get to be set by the government. Is sitting at, I think the increase was almost 1.26. And there, the internal one was almost 1.2. So it's a question of people focusing on pricing, people realizing that they're getting more value. And thanks to Dis-Chem as well, they used to be in the what we call the retail malls kind of a thing, not in the malls themselves. So now they're inside the malls, so they're giving a direct competition to the likes of Clicks and other pharmacies, because at some point you used to get them at what we call the retail crosses. So they've just now moved into the malls as well. And the guys that are setting to go ahead to make sure that they continue to increase the stores to almost 151 by the end of financial year of 2019.
If we take a look at those retail sales numbers, as you said, 2.5% year-on-year increase for the month of August. Household furniture, appliances giving the biggest increases there. Textiles, clothing and footwear as well being the other ones that are on 6%. Do you think it's a sustainable picture? Yes, perhaps you have this one-time uptick, but consumers are under strain.
Understand, but so far the consumers have been trying to do it. Check what happened with the June number. It was 1.8. We had a dip in July, 1.3. Now it's going up again, 2.5. Yes, we know that. I mean, for the past 15 years, we've been averaging plus minus 4.5%. Consumers are under strain. We know all that. But so far, I think we can live with a number just around 1.5 or so. And then it's a very important number because it shows you the health of the economy, because the more than 60% of the economy is driven by consumer demand.
But that takes a hit the moment you tinker with the taxes, doesn't it?
By all means. Also, the petrol will have an effect if the petrol prices has to continue to increase. And the likes of Dis-Chem, they even mentioned it, that the petrol increases, the VAT increase as well, had a knock-on effect, for 2 months or so. August, they started to pick up. So definitely, taxes will definitely have a negative impact, because it means you are getting less money in your pockets. Then, we know our economy needs money for it to grow. So where are you going to get the money if they continue to increase taxes?
Makwe, I won't be seeing you before the midterm budget policy statement. So your tips for Tito, shall we say?
Tito, make sure that you spend whatever it's been allocated, because there's a huge opportunity cost in that, and people tend to undermine that people, departments return back the money. If money has been allocated to something, please make sure that gets to be spent. We tend to focus more on irregular expenditure. We forget this other part, that money was supposed to do something to stimulate our economy. So that's also very critical.
Makwe, appreciate your time there. Makwe Masilela, there from Makwe Fund Managers, giving a clear picture to the Finance Minister, Tito Mboweni, as the MTBPS draws ever nearer. It is going to be a critical statement there that he puts out. How exactly will South Africa deal with the reforms? Will we actually adhere to the things we put out in the budget and perhaps be able to decrease that debt ceiling as well? That's going to be quite critical, not just for the ratings agencies, but for the good of the country as well. All that and more, of course, expected out next week. That's where the buck stops this afternoon. Zinga Nompumelelo joining you right after this. Stay tuned.